Nvidia, already on the way back up after tariffs turmoil. Well, that didn't take long. Just a few weeks ago, Wall Street was spiraling into a GPU-fueled panic after the US hinted at tightening tariffs on tech exports to China. Nvidia, yeah, it got caught in the crossfire. The stock took a gut punch. But now, the market's favorite silicon beast is already on the rebound, and it's moving fast. Welcome back to the channel. If you're into chips, chaos, and capital gains, you're in the right place. Smash that like button if you think tariffs are just taxes with a fancy hat, and let's talk about why Nvidia is brushing the dust off and climbing back up. Let's rewind to late March, when the word tariffs once again spooked the semiconductor sector. The US floated the idea of tightening restrictions on AI chip exports to China, again, and investors collectively spilled their oat milk. Nvidia's stock dipped nearly 9% in just days. Why? Because around 20% of Nvidia's data center revenue comes from China. That's not nothing. But here's the kicker, the chips that were being restricted. Yeah, Nvidia already had China-specific versions designed to just barely comply with export rules. They were too fast for US regulators but too valuable to lose entirely. Call it Silicon Valley Jiu-Jitsu. Fast forward to now, mid-April, and Nvidia is already making up lost ground. Why? Because investors remembered that Nvidia isn't just a China story. It's the AI infrastructure story. Microsoft, Amazon, Meta, heck, even Elon's ex-AI startup, are scooping up Nvidia GPUs like they're beanie babies in 1997. And those AI data center orders? They don't care about Chinese tariffs. They care about one thing, H100s, H200s, and whatever the next GPU beast Nvidia slaps a label on. Even after the tariff noise, analysts didn't downgrade the company, they upgraded price targets. Goldman Sachs called the dip a buying opportunity. JP Morgan said Nvidia's demand remains insatiable. And honestly, they're not wrong. Now here's the plot twist. Despite the export controls, Chinese tech firms like Alibaba and Tencent are still finding ways to get their hands on Nvidia hardware. Either through local resellers, cloud proxies, or, allegedly, friendly gray zones. Translation: where there's demand, there's a way. And where there's a way, Nvidia finds a margin. Let's not forget, Nvidia's non-China data center revenue is exploding, with year-over-year growth over 250% in Q4. And that's before most AI startups even get serious about deployment. On the charts, the stock is forming what the pros call a V-shaped recovery, aka panic sell, panic buy. Support held around $850. Now it's clawing back above $900 like it never left. Options traders, turning bullish again. Retail investors, dipping back in with that buy the dip swagger. Institutional whales, still loading the boat, because let's face it, there's only one Nvidia. And earnings, coming up in May, which means this rally might just be the warm-up act. So here's the real story. Tariffs caused a tremor, not an earthquake. Nvidia isn't just a chip company anymore, it's the picks and shovels supplier for the AI gold rush. And like any good monopolist with a backlog months long, it has pricing power, product dominance, and political immunity wrapped in a halo of innovation. Even if China vanished tomorrow, Nvidia would still be printing money. And if China finds a workaround, as it always does, then it's just icing on the cake. So, is Nvidia back? Let's be real, it never really left. It just paused for a second so the rest of the market could catch up. Then remembered it's the one driving this AI arms race. Drop a comment. Are you buying more NVDA, holding, or just watching from the sidelines with popcorn? And don't forget to subscribe for more takes on the companies shaping your financial future, whether they like it or not. Until next time, keep your chips close and your stop losses closer. Peace. Subscribe, watch next, Nvidia's AI Empire Explained.